Welcome to Top Tips Tuesday. This week's tip is in regards to rental yield versus capital growth. It's really important to understand both and the importance of both. So in the ideal world for a property investor, you would expect capital growth and positive cash flow. The reality is there's normally a bit of a trade-off between the two and a bit of a balance. And it's not one rule for every investor. Some investors will be looking for stronger type cash flow type properties to fund their next purchases or to not be a drain on the resources. And other clients might be happy with a property that's going to cost them a bit more but going to grow better in capital growth. So cash flow or yield is very easy to calculate, and we can know that from the purchase price divided by the annual rent. And for all my clients, I always do, investor clients, I always do a property investment analysis, which actually shows you the cash flow. So all the income coming into the property versus all the expenses going out. So we actually know exactly how much that property is paying us or costing us per week. So that's a very easy process to work out. Very important to have something that's positive cash flow, so that's not costing any money to hold that property. In terms of capital growth, it's a little bit more challenging to analyse or estimate that, and because the reality is we don't really know how much that property is going to grow by. There is some indicators and clues and information and statistics that we can use to work out that. So when we're looking at capital growth, we're looking for areas where there's population growth, where there's more buyers and sellers, a shortage of property, and where the government and private enterprises are spending a lot of infrastructure. So these growing locations where there's more demand for supply than there is actual properties available for sale, and that will give you the capital growth. And just remember, property investment is generally a long-term strategy. So if it's a buy and hold, whether the market's going up or down, as long as it's positive cash flow, it's not costing anything to hold on to that property. I hope that's helped, and look forward to seeing you next Tuesday. Thanks.